Hi everyone, welcome back to the channel. Now in this month's analysis I'm going to walk through another really high level broader market overview. I'll spend probably around 5 minutes just walking through all of the key major indexes, and as usual I have around 20 individual stock ideas for your watch lists going into May. Now it's taken around 20 hours to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work. If you follow me closely on social media, hopefully my charts have helped in some way over the crash that we've all been dealing with. Now before I get into the charts, for disclosure, myself or my clients may hold positions in some of the names mentioned, but I have highlighted any relevant disclosures on the charts. I think most of you who follow me closely know that I don't use any magical hindsight indicators. I timestamp absolutely everything, which is massively important. I'm one of the very few who go on the record with their work. I've been asked recently for my performance data over the crash and over the last 12 months, so I've popped that information up on the screen. Just to be clear, I trade options as well, stock and options, it's not just stock picking. But before I get into the charts, to be completely clear, I'm neither a perma bull or a perma bear. I just analyse the data and the charts as it comes in, and I like to draw logical conclusions. I think my charts are among the cleanest that you'll see, so hopefully they're well understood. But please do pause the video, very important disclaimer, and also please smash the like button, share with your followers, subscribe. It really helps with the YouTube algorithm and really helps to get my work a lot more noticed. Now, I'll just run through the major indexes. I think one of the biggest things I'm being asked at the moment is whether or not we're dealing with a bear market rally or a V-shaped recovery. So I've got some charts that I just want to present, because I think there's a lot of hesitation. I think buying stocks now after such a big rebound that we've had, I get it. But from my perspective, the S&P 500 over the last few weeks, and I think for those of you that are maybe learning, I think for me, I like to use support and resistance levels. Obviously, I like to use Fibonacci levels, etc. as well. But for me, the S&P 500 has rebounded perfectly from logical levels. Now, this has been my chart for many years now. That this is one of the biggest charts that I like to use, the longer term perspective of the S&P 500. Now, my work's got a lot of attention over the last few weeks because I've been putting out a lot of bullish charts to social media. Now, the reason for that is really the collapse of the VIX. Now, if you're out there, and I would urge you to replicate this chart in some way, it's very, very helpful. But what we've seen is a very textbook capitulation entry. Now, when the VIX gets a spike and it gets above 50, you really need to start thinking about buying stocks into fear. That's something that I've drilled my clients on for a long time. It provided a very timely bottom signal back on August the 5th. Again, if you follow me on X, you'll know that I called this in real time, and also recently another buy signal on April the 7th. Now, the collapse of the VIX is very, very encouraging for me, but is it a V-shaped recovery or is it a bear market rally? This is the chart. Now, the S&P 500 chart, I think, shows it really well here. Back in the COVID crash, we dealt with a V-shaped recovery. Now, I remember at the time this was a really hated rally, and then of course we ran into the 2022 bear market. Now, very, very simple indicator on this chart is the 40-week moving average. Some of you might prefer the 200-day moving average. I prefer the weekly chart, so I like to use the 40-week moving average, which acted as a strong barrier for price throughout the whole bear market, and then eventually we got above it, and then obviously we're off and running, market bottom is in. Fast forward to today, are we dealing with another V-shaped recovery, or are we about to get rejected at these key levels here? Now, first thing to say is I'm open to both possibilities. We've had an 18% rally off the lows. That's a 2-year S&P 500 return in a matter of weeks. Just for some perspective, we did have an 18% rally at the bottom of COVID, and then obviously we rallied much, much higher. I'm very much in the camp that I would really prefer that. But we are moving into key levels, so we're not going to get a resolution to this big question today. There is around 30 minutes left in Friday's session at time of recording, but next week, if we can get a breakout above these levels, then obviously very encouraged. But I think there are some clues taking shape around the world. Now, Germany, for example, again, exactly the same kind of look to the S&P 500, V-shaped recovery, sideways bear market, but noticeably the German DAX is now close to testing previous all-time highs. So that's gone into full V-shaped recovery mode. Now, I've just selected a few charts here. There's many more that I could have shown, but it's not just in Europe. We're seeing the same thing kind of take place in Asia as well. I know the headlines, the Trump tariffs, etc., are really messing with everybody's investment portfolios, and I get it. But for me, I'm trying really just to stick to the charts, filter out a lot of the news headlines. So Singapore, so Asia is doing the same thing. Spain as well, testing previous all-time highs. So the idea that the US markets can't follow the rest of the world doesn't seem terribly logical to me. Now, that doesn't mean that the S&P can't fall away at the levels that I've already highlighted, but for me, I'm just a lot more open to the idea that we are dealing with a definitive market bottom. If the market and price tells me that's a dumb idea, then of course risk management process kicks in, trailing stop losses, etc. But for me, I'm very much open to the idea that we're dealing with a definitive market bottom. Now, just to take it down into the weekly time frame, just to kind of show where we are at the moment, we are testing the 40-week moving average, as I've already shown. But again, I like to pay attention to strong support levels and also pay attention to heavy volume. Now, I know when we had that monster intraday move when the S&P was up nearly 10%, you know, that's just ridiculous. But again, that just told me that buyers were prepared to step in, and of course what we've seen since then is just a steady stream for the S&P 500 to move higher. A lot of individual stocks now are testing previous all-time highs. It doesn't mean all stocks are a buy. I think that's something that's becoming very clear. I think there's a very clear move towards strong companies, solid fundamentals, etc. But certainly the S&P 500 has moved off the lows on heavy volume, and that's information I like to pay attention to. So when we get information like that, we get the VIX capitulation. Again, it's just one of the signals on why I've been putting out bullish charts to our clients for the last 3-4 weeks. The triple Qs have a very similar look. Again, 40-week moving average. We're testing key levels. So again, I'm not going to make any big calls today where this ends up. But again, when you're 25% off all-time highs, the market's already crashed. It just makes a lot more sense to me to consider stocks to buy. I'm not looking to short the market. I never short the market. A couple of hedges here and there, but outright shorting for me, the violent rallies are just too stressful. So I learned a long time ago to just, when we get corrections and crashes, just start flipping it and looking for stocks to buy. Just seems a better way of doing things, but hey, we're all different. The Russell 3000, again, I actually prefer this chart to the S&P 500, just because I think it just gives a better view of the total market. Again, heavy volume, rebounding from logical levels. So I think if we get above this 40-week moving average and we get back up above these pivot levels at 330, then I think, I'm very much encouraged by that. The NYSE composite, interestingly enough, is actually now positive for the year. When I had a look at the data earlier on today, I think it was up around 1.5–2% for the year so far. So we are starting to see a lot of stocks around the world recover, and US markets do seem to be following suit as well. The Dow Jones Industrial Average, again, big declines, but we're halfway towards our upside targets here for the Dow. I'm not particularly keen on a lot of the individual stocks within the Dow. The charts are a mess. Obviously great businesses, I get it, but a lot of them are just dinosaurs. They don't really provide any kind of alpha in my view. But if the Dow can get above that kind of 420 level, then again that just gives me added confirmation that we're dealing with a definitive market bottom rather than a bear market rally. So those are kind of some of the key major index charts that I would just urge you to maybe keep an eye on over the next few weeks. Now, I did say at the start that I had around 20 individual stock ideas for your watch lists for the month of May. But if you're still here, tells me you're getting a bit of value from the analysis, so please just smash the like button. Like I said, it helps with the YouTube algorithm and helps to get my work a bit more noticed. But some names that I want to just kind of throw out there. Actually, let me just step back. 10-year note, I just had to quickly touch on the bond market. I get a lot of questions on the bond market. The charts for me aren't terribly interesting or clear. We're stuck in a sideways range. Do we go up? Do we go down? No idea. The gold market as well. I think with gold, the levels that we have on our charts here for 3,200, our targets have been met for gold. I'm probably expecting a little bit of digestion of gains. I think that's what we've probably seen over the last couple of weeks as gold has kind of fallen back a little bit. We're seeing that with some of the individual gold miners. Silver has been an area of the market that I was thinking at one point it might be a catch-up trade to gold, but that's just not materialised. We're still well under previous all-time highs for silver. But again, if silver can put in a breakout there above that $35 level, then obviously it becomes appealing. But for the time being, I think for me, precious metals, gold has hit upside targets, and silver still has a little bit of work to do. But into some individual stocks now. Semiconductors are massively interesting to me at the moment, as I'm sure they are for many of you. Like I said, it makes more sense to me to look for stocks to buy, and I like to use obviously my ETF chart book. And I think there's a little bit of a scoop and score here, call it a failed move, whatever you want to call it, but it's an area of the market that's obviously been beaten to death, and like I said, I view them as massive opportunities, none more so than a stock like NVDA. Now NVDA is underperforming the S&P 500 by 12% so far this year. But that doesn't scare me at all. Underperformance doesn't mean continued underperformance. I think by the time a lot of stocks start to show up on the relative strength scans, you've already missed it. The relative strength breakout gurus are all over them. I like to find stocks that are maybe a little bit under and have decent upside potential. And I think NVIDIA fits a lot of categories for me. So I think if NVIDIA can get above that 115 level, I think it's one to add to your watch lists perhaps for next week. Same with Broadcom. Again, it's rallied incredibly well off its lows. Looks like it's potentially breaking back up above key levels this week. And again, our upside targets here are still up around 250, and obviously that represents a massive return. So fingers crossed for Broadcom. Now, Palantir has been a stock that I've been covering on my social media channels 15 months, I think. I've been covering it every step of the way now. Just for disclosure, it's a stock that it's in our Trade Ideas chart book, but we have earnings coming up, and a lot of folks are asking what my thoughts are going into earnings. Now, I don't really have any thoughts on earnings. I think I've got a very rules-based system with earnings. I think something that keeps me safe and helps me sleep at night is having a rule in place that just says I have to be at least 10% in profit in order to hold through earnings. Now, I'm very comfortable with my position in Palantir at the moment. It's just met upside targets pretty much today. So I've probably got a decision to make on Monday, whether or not I maybe want to reduce position size, etc., etc. I think we all get it. But if it does put in solid numbers again, like I think a lot of folks are expecting, just with the deals that it's announcing with the likes of NATO and all the companies they're doing contracts with, etc. But if it can put in a breakout and get going again, then 170 would be the upside target. But it's impossible to jump in up here unless you've got risk-defined options, which is obviously a bit of a lottery going into earnings. SoFi earnings last week looked pretty decent from where I was sitting. The chart's very, very close to, for me, another technical entry point. I think if there's a confirmed breakout above $14, then there are logical levels to aim for. Now, of course, there's obviously a bit of chop and digestion around that 17, 18 level. But certainly if you are looking for a starting point, then perhaps $14 might be a level to keep an eye on. Robinhood's caught a massive bid over the last couple of weeks now. For those of you that don't keep an eye on correlations, Robinhood is actually really, really strongly correlated with Bitcoin. And obviously Bitcoin is rallying off its lows like the rest of the market is. So the levels that I'm working with here are the pivot levels here, up around $67. It just has the look of a stock that's bottomed. Obviously earnings are out the way. A bit of a muted reaction this week, but by and large I think there is a potential for this to potentially start to trend, provided obviously the market doesn't fall away at the levels that I've been walking through at the start. Netflix, obviously we've had earnings, big reaction I think over the last few weeks. Again, banging the drum on this 40-week moving average. One of our stocks off the lows is doing really, really well, and I really like breakouts above the big round numbers. Now Netflix is above $1,000. Probably expect a stock split in the next few months on Netflix. It's obviously getting quite expensive, but yeah, I think if there is a pullback, which I think there probably will be, I think obviously a month of solid gains, you're probably going to get a pullback at some point. So I think on a pullback, if the $1,000 level holds, that would probably provide a bit of a better entry. But if the levels hold here, 1,500 would be the level, provided the V-shaped recovery, yada yada. The Dell chart I think looks quite interesting to me at the moment. Again, very, very similar kind of look to the semiconductor chart that I walked through a few minutes ago. Bit of a scoop and score, call it a failed move. But again, if you're into more of a swing trading style, then potentially Dell might fit the bill. There is a descending trend line, but yeah, the chart for me looks reasonably clean, and you can define the risk against very manageable levels. One of the Dow components, Travelers companies, Again, rebounded incredibly well off its lows. Very, very solid chart. Obviously a solid company, etc. It's one of the better looking charts in the Dow Jones. But I am using Fibonacci extensions now. Not all charts, I think, use the same indicators. I think, that's where analysts come in. We have to take the time to figure out what tools to use for each individual chart. And for me, Travelers just is a Fibonacci chart. I think the chart shows it really well, and potentially if it can break out, then maybe 350 comes into play. But it's not a momentum stock or anything like that. It's one of those kind of slow and steady wins the race type of names. But going back into retail with Mercado Libre, again, very, very solid company. Looks like it's breaking out to new all-time highs. It's broken out above $2,000. I would have expected a stock split by now, but it's not coming at the moment. If the $2,000 level holds as support on any pullback, then I like it up to 3,300. Spotify, massively positive earnings in my view. Again, I posted this chart to social media during the week, just saying that the 20-week moving average makes a lot of sense, and obviously it's been a buy the dip candidate as well. It's one of our strongest stocks over the last couple of years, and potentially it's only $120 billion market cap as well, so it's not, if growth keeps going for Spotify, there could be a little bit more of a runway there in terms of market cap. But again, if it breaks out to new all-time highs, then our upside targets here are up around 900. Caterpillar, now again, some stocks you just prefer to buy low. There's not some stocks, breakouts just don't make sense. I think Caterpillar for me has always made more sense on big deep pullbacks. Again, going back to what I was saying about figuring out what tools to use for each chart, for me Caterpillar is a textbook 200-week moving average pullback chart. It's been one of our buys off the lows, and I think there's a technical swing trade above 310 there, and then previous all-time highs. It seems like it's a logical target to aim for. Roblox, again, I believe it's one the kids are using these days, but yeah, very, very straightforward. Nothing too sexy with the chart. It's basic support and resistance levels and breakouts, and above $70, I think you can continue to be long on Roblox. C Limited, again, going back to retail, Amazon of Southeast Asia. Again, I've heard it being called that. But again, 40-week moving average, big pullback, rebound, and it looks like it's moving higher off the lows. Now, if this can get back to previous all-time highs, which is obviously a massively tall order, especially in retail, then there is a massive upside potential there. But certainly C Limited, if you've got a longer term view, then it might be one that is appealing. Google, again, one of our stocks off the lows. I think, with Google, earnings look decent. The chart is textbook basic support and resistance. So again, if it can get another breakout there, then there might be a swing trade there, $15. But stocks like Google, stocks like Microsoft, they're both just stocks that I automatically look to buy on big dips. Again, Microsoft, there's a lot of charts I think floating around social media with Microsoft. Not too keen on many of them. I think this is probably the cleanest one that you'll see. I think for me, pretty straightforward. It's pulled back to its 2021 highs like the triple Qs did, like the S&P did. It's rebounded massively, and our upside targets there are back at previous all-time highs. Obviously above that you're bringing in higher targets, but for the most part it's the most valuable company in the world at the moment, and certainly the path of least resistance is higher. But again, on moves like this, probably a little bit of a pullback soon, but overall previous all-time highs as a target. Meta, again, earnings this week, so I've been watching it with a lot of interest, just to kind of see what it would do on earnings. I think the reaction has been pretty decent. I think as I record this today, it's up around 4-5% on the day as well, so there might be a technical trade in there if it can break back up above its 40-week moving average, with conviction, follow through maybe Monday or Tuesday next week as well. Now GE Vernova, spin-off of GE, has just been an absolute monster. This was an absolute monster last year. Just show you the trend and what it did. So just absolutely ripped higher, and then since then it's obviously been base building, the crash. I posted this chart to social media during the week, and our upside targets here are up around 450. Potentially could be breaking out above another pivot level is there as well. AppLovin. Now, AppLovin's probably a bit of a divisive one. Now, again, this was another massive gainer last year. Again, posted this to X in real time as well, I should say, when it pulled back to $65. And since then, it went on a monster run, 750 odd %. It's been taken to the woodshed since then. Downgrades. Muddy Waters had a short report on it. But they report earnings, I believe, on Tuesday, maybe Wednesday. So it'll be interesting to see what earnings look like. It's one that's on my watch list. I'm closely following it at the moment. But like I said at the start, I'm not looking to gamble on earnings. For me, it's more prudent to just kind of wait and see what the earnings reaction is, and then kind of make a more informed decision. Amazon, again, potentially if it could get back up above that $200 level, then that would represent for me another technical entry point if you missed the recent lows. It's obviously Amazon. I know the earnings went out yesterday. Very, very, depending on who you speak to, whether it was good or whether it is bad. I'm more concerned with what price does, and so I'll be watching Amazon over the next week or so, potentially with a view to getting back in. Okta looks like it's putting in maybe a 2-year cup and handle pattern. That would bring in first targets there around 140 if the breakout sticks the landing, and above that, of course, we're off to the races. But it is outperforming the S&P 500 by 45% so far year to date, so it is a massive performer. And we've also got TKO Group as well. Now, if you're not familiar with TKO, we're talking UFC, WWE. We've got a $13 billion market cap. Now, they are in the mix for a new TV deal as their ESPN contract is up for renewal. There's rumours about Amazon, Netflix, etc. So there's a big deal in the near-term horizon for TKO. Depending on what that deal looks like, it could fly. But again, I'm just using a very basic 5-month moving average here for TKO Group, and I think here you can just remain bullish above 160. This has been one that's been on our radar for a long time. It's been in our chart book for a long time, and hopefully it can take the next leg higher. But if you're new and you're wondering who I am and what it is I do, there's a link in the description. Feel free to jump on to our website at honeystocks.com. All of our transparent timestamp work, it's all laid out for you. Like I said at the start, I only use my own charts and my own data, but we provide memberships to all of our premium work, which includes all of our premium weekend analysis every single weekend, all of our best charts, and our weekend hot list. Provide access to all of our highest conviction investment ideas. Now I'll show you what that looks like in just a second. I also provide access to our midweek halftime analysis, which is a 5-minute, 10-minute analysis just covering some of the indexes and a few trade ideas. Also provide access to a really wonderful community, professionals, investors, traders from all across the world. Provide access to all of my chart books as well. So if you need a stock, if you need ETFs, if you need commodities, you have access to all of my chart books that are all pre-built, and you can use them for your own purposes. And also, if you are someone who is new to technical analysis, I also provide access to my complete technical analysis program. I used to charge a bit of money for it, but now I just include it in all of my memberships. I'm told that it's incredibly well built and very, very useful as well. But just to quickly show you what our high conviction ideas look like, this is one of the ideas for Palantir in the last couple of weeks, which has just been an absolute monster again. We've got GE Vernova, which I touched on just a few minutes ago. Very clear instructions on the charts. I tried to make things as simple as possible. NVDA, again, massive gainer. Spotify, still going, absolute monster. But I'm very, very unique in what I do. I publish on my website all of the highest conviction ideas that I've ever put out to my clients over the last 6-7 years. So feel free to go and scrutinize that. Make sure that the types of stocks that I'm recommending are the types of stocks that you like to buy. I'm not recommending penny stocks or pump and dumps or anything like that. It's all high quality stocks with very clear instructions and ideas and risk management around it all. Yeah, like I said, feel free to go and check that out. But I think generally speaking, my work is a good fit for anyone who has a mid-term approach. If you're sick of losing at day trading, if you're sick of missing market bottoms, if you're looking to learn technical analysis, you want to be part of a community, and maybe you're just sick of hunting around social media for ideas and would want access to a professional analyst every day, I do have a very dedicated platform where you can message me instantly, and I do tend to get back with my charts within an hour or two. So very, very slick community I've got. So again, feel free to check out our website, link in the description at honeystocks.com. But if you have stuck here to the bitter end, thank you very much for watching, and I hope to welcome you soon. Thanks as always.